Good morning, folks, and welcome back to Almus Market Mornings. Amidst the year end festivities, one of the key asset holders who have celebrated over the course of the year have been the holders of precious metals. Now, whether it's betting on the debasement trade or the severe supply crunch or rising up to the institutional shorts in the famous GameStop like manner, till now, all of these bets have delivered. The important bet now would be to understand whether this is the theme that would carry forward again into the next year, considering a lot of price rise has happened during the very thin global markets. Good morning, JK. I feel with such a sharp rise in prices in precious metals, now would be a good time to share your wisdom on what investors should plan going forward.
Good morning, Swaraj. Definitely. Yes, precious metals have made headlines almost the entire month in December, and that has continued till today. For instance, silver has risen 48% this month. That's a whopping rise, and platinum rose 53% this month. Compared to this, gains in gold have been, somewhat dwarfed, but I think the fundamentals governing the different metals have been different. Silver has not only had a speculative support, but also important factors like physical shortage, rising industrial demand, and restrictions. Latest news about restrictions of China on their export of silver have all led to this phenomenal rise in silver. And of course, because similar demand is also coming for platinum in automobile industries, we have seen that also rise substantially. Gold, of course, is seeing a consistent demand from the central bankers who have been uh, decentralizing from their dollar reserves into precious metals for quite some time now. Now, question is whether this will continue. It's a very important question to understand. Now, left to speculators, I think it's difficult to put a target or upside level for this parabolic rise that we have seen. However, what can actually stop the rise from being unabated is the concerns from the governments about the inflationary impact of rising the prices of these metals. So we already seen on the over the weekend, CME has imposed additional margin of $25,000 on silver contracts, and similar actions may be seen further if the prices keep going up. Because one thing is to let the speculators determine the price, the other is to see how it impacts the inflation, and also the industries themselves who are already faced with shortage of the metals with further rise in prices. I think it makes a case for higher inflation and then later on maybe recession in these industries. So I think it's time that authorities will act more to see that the price rises is cooled off. And also with such a big rise in the prices and huge profits that is seen on the books, investors may be ready to take some profits off the book. So I think while you know the players have not given up their bullish bets, it's maybe we can see some cooling period in these metals in the at least in the new year for some time. And people will not forget that in the earlier instances of silver rise, for example, when it started correcting, corrections were also massive, something like 40% fall a couple of times and all that. So it just needs one big technical trigger for it to correct very sharply. So one should keep an open mind about these metals, not to give up on the long-term bullish view, but then at these levels, I remain really cautious. And also, you see, there is an increasing positive vibes coming on the Ukraine-Russia war peace plan as well. So that can actually lead to gold giving up some of its safe haven appeal. And that can rub off on other precious metals also. I see the meeting between the US president and Zelensky is reported to be on a good in a good place, While Ukraine says security guarantees are 100% agreed to, Trump is saying about 95%. There are some issues on on the territorial matter, but President thinks that they are much closer to a peace deal, and I think the final outcome would depend upon the Russia's response, and Europe is also quite positive on these developments. So that's apart from the metals, the peace issue in Russia is the headline that we are focusing on. Hopefully, the new year will start with this good news, and that may not be such a good news for the speculators in the metals. They may have to see some lower prices, as they take profit as well. And that, of course, is also a good news for economies, because the peace in Russia-Ukraine war would also lead to further lower prices in crude prices as well. So that's something which helps even in countries like India. Now, on the currencies, not much movement in the major currencies. Yen has been moving between 155 and 157 after the rate hike by Japan. Japanese inflation coming lower, and also the sense that Japanese authorities will not raise rates more frequently. They will be taking up their rates towards 1.50 from the current 0.75%, but then that will be in a very measured way. Therefore, the markets are not reacting very much on the rate hike to strengthen the yen. So yen may continue to be used as a carry trade for seeking higher return assets as well. Also, on the upside, dollar yen may be capped because of talk of intervention, but I see that happening only near 160 levels. Euro seeing usual month-end demand, and that actually can also see whether that continues in the sense the upside of the euro, whether it continues into the new year or not is a question. But considering that European yields have been rising, and the official rates are seen a bottom compared to open-ended expectation on the US rates, keeps the euro bid. So overall dollar seems to be on the slightly defensive side, particularly against the major currencies barring the yen. And on the rupee, the effect of RBI's massive intervention on 2 days, in the last week, has actually faded, and we are seeing the corporates back to buy dip mode, and that is supporting the USD-INR very much near the 89.50 levels. And RBI's actions have been very limited in the recent up moves. I think what we are missing is the capital flows, which should have taken care of the consistent demand, which is always higher when you look at the trade deficit. And therefore, in the new year, what we should be looking forward to is whether there is rise in the capital flows, particularly from the FIs, who have been big sellers and who have shunned Indian markets for over 15 months now. The other important factor for India to look ahead to is whether the tariffs, at least the penal tariff of 25%, will be removed by the US, even as two factors help in this, because reportedly Indian import of oil from Russia is hitting the lowest level since in this month onwards. And then the peace efforts in Russian region, if it is ultimately achieved, there is no justification for US to continue to impose a penal tariff for importing oil from Russia. So we may start with some positive vibe as far as India is concerned. It's still not given. We still have to wait and see whether that happens. Till the month end, of course, we see more demand in the USD-INR towards 90 plus perhaps. And in meantime, RBI's massive liquidity injection measures have resulted in forward premium coming off. The 1 year forward premium is now down from nearly 3 rupees to around 2 rupees 50 paisa. and that's quite a draw, but still looks elevated considering the interest rate differential between US and India. All said and done, I think today and tomorrow we see some moderate action, but then after that, mostly the traders would shut down and wait for some new themes or new positions to emerge in the new year. Thank you.
Thank you, JK. And so when it comes to the metals, be wary of any sort of large correction that can come in. As JK mentioned in the previous years, especially with silver, we have seen very, very sharp corrections that can take out a lot of people. So be wary of that. More or less, there's some positive vibes also coming in from the Russia-Ukraine peace plan. Some issues still prevail, but it will take some time to get addressed. But it looks good as of now, and that's something the markets may cling on to while going into the next year. Currency markets largely been range bound, and when it comes to rupee, the effect of RBI's intervention seems to be fading now because a lot of dollar demand emerging near 89.50. Um, Capital flows is missing. That's the theme we have covered the entire year this year, and that resumption of capital flows may be a theme that we track starting next year, which may support the rupee. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh round of updates.